Hi guys, welcome to Shal Studies. Today we'll be discussing very important concepts in accounting, debit and credit. So you might have heard these terms somewhere in your daily life, right? When you are doing an online payment, you will be getting messages or SMS saying your account is debited with this much amount or your account is credited with this much amount. So when basically you are paying an amount, the account will be debited, and when you are receiving an amount, the account will be credited. So now you will be thinking like credit is something good and debit is something bad, right? But no, these are not something based on good or bad. It actually depends upon the case. I just want you to understand that there is no good or bad. These are just two terms to represent something. Okay. So when we were studying mathematics, at the starting we'll be knowing that there are terms addition and subtraction, but we'll be understanding what actually addition and subtraction is only when we are doing the problems, right? In the same way, we will understand what is debit and what is credit when we are doing the problems. Fine. So before going into it in detail, we need to know some rules of accounting. Okay, so think you are playing a game. So when you are playing a game, you should be following the rules of the game, right? So in the same way, when you are doing accounting, there are some rules. These rules are to be followed in accounting all the time. Okay, so that's why I said this is so important that you should understand this. And only if you understand this, you will be able to go further. In this table, you can see the words asset, expense, liability, equity, and revenue. You are familiar with these five words. We have seen it in the previous video. I have given an extra word that is drawings. Okay, you know what a capital is, right? Or equity. I'll give a situation. You are putting money into the business, so that is capital or equity. Just the opposite of that. You are taking back the money for your personal purpose. So that is drawings. Okay, so now we are having six terms and we are having some rules related to these six terms. Okay, now you just want to understand what it is. Fine. Okay, so drawings. When drawing is increased, okay, when drawings is increased, we have to debit it. In the same way, when drawings is decreasing, you have to credit that account. Fine. Now, when you are buying an asset, say a machinery, asset is increasing, right? So when asset increases, you have to debit it. When asset decreases, you have to credit it. Now, in the case of expense, when expense increases, you have to debit it. When expense decreases, you have to credit it. So it's the same working for drawings, asset and expense. Now the case of liability, when it increases, you have to credit it. When liability decreases, you have to debit it. When equity or capital, when it increases, you have to credit it. When it decreases, you have to debit it. Now, revenue, when it increases, you have to credit it, and when it is decreasing, you have to credit it. Okay, I know you are still confused with what is happening and what is debit and credit. We'll understand it in the problems. So I just want to make you know that there is this basic rule. Okay, you have to understand that. Fine. And also have given a column of balance. So basically, drawings will be having a debit balance, asset will be having a debit balance, expense will be having a debit balance, liability will be having a credit balance, equity will be having a credit balance, revenue will also be having a credit balance. Just understand that these are the rules. Fine. Now we'll be going into the problem. Problem in the sense we'll be discussing some real life situations. Okay. You are buying a book. Okay, you are going to a shop and you are buying a book. You are giving cash to buy the book, right? So there are two things involved in this transaction. What are the two things? Book and cash. What is increased here? Book is increased here and cash is decreased here, right? Okay, now come to the business. You are buying a machinery. Fine, you are buying a machinery. So we are having two things, that is machinery and cash. Fine. So in this case, what is being increased? Machinery is increased. What is being decreased? Cash is decreased, right? Machinery is increased and cash is decreased. Now just think about the rule. If I come back to the rule, what is a machinery? Machinery is an asset. So in the rule we saw that when asset is increased, we will debit that account. Fine, we will debit machinery. Okay, the second thing was cash. Cash is also an asset. Here asset cash is decreased, so we will credit it. So just understand that machinery is debited and cash is credited. Now we are going for a second case. We are taking loan from bank. The two things involved are bank, that is a loan, and cash. Fine. So cash is an asset, as we said before. Cash is an asset. Here the cash is increasing. When we are taking the loan, we are getting the cash. So cash is increasing. So we will debit cash. Fine, we will debit cash. And the second thing, the bank or the loan, that is actually a liability. Why is it a liability? Loan is a liability for us, right? We have to repay it. We have to repay it. We are having an obligation to repay the loan back to the bank. So it is a liability for us. Okay, here the liability is increased. The liability is increased. So what we should do? Go back to the rule. We should credit it. We should credit it. So from these examples, we can understand that every transaction will have a debit and a credit. As I said before, we cannot say one is good or one is bad. It depends upon the situation. Okay, and because of that, it is called a double entry system or dual aspect. Fine, there will be two things happening. There will be at least a debit and at least a credit. So it's called double entry system. Fine, now we are actually going into the problem, or we are going to start with the journal entries. Fine, so I am going to show you a format of a journal. Okay, so you can see 4 columns. First column is date. So basically date column, we will write the date of the transaction. Fine. And particulars column. Particulars column is something that describes what happened. Describes in the sense there is a format, of course. See, in the case of buying a machinery, we said we will debit machinery and we will credit cash, right? So that will be written at this particular space. Fine. Now the next column is LF. LF is kind of a page number, okay? It's kind of a page number, for we are using it for reference. Fine. Then we are having debit and credit columns. Debit and credit columns. We said we are having, for every transaction there will be at least a debit and at least a credit. So here we will be writing the amount of the transaction. Like we said, in the case of buying a machinery, we are buying it for 1 lakh rupees. Just imagine we are buying it for 1 lakh rupees. So machinery will be debited with 1 lakh and cash will be credited with 1 lakh. Okay, we'll get into that. We'll get into the problem. Okay, so I am giving you a problem. On January 1, 2023, machinery was bought for rupees 1 lakh. That's it, simple. Machinery was bought for rupees 1 lakh. So how we will write it in the journal? So we have the date January 1, 2023. Fine, that is written in the date column. Then we have particulars column. In the particulars column, we will be writing whatever is debited at the first line. Fine. In this case, machinery is debited, right? When we are buying machinery, machinery is debited and cash is credited. Just go back to the rule, it will be clear for you. Machinery is debited and cash is credited. So we will be writing machinery account debtor, DR. Okay. Then in the next line we will be writing 2. What is credited we will be writing with 2. Okay. Here cash is credited, so to cash account. Now we have to write a narration in the bracket, that is simply the explanation or just a line of what is happening. Okay, in the bracket we are writing machinery bought in cash. That's it. Okay, in the debit and credit column we have to write the amount of the transaction. Here it's 1 lakh, so we'll be writing straight to machinery account in the debit column, and to straight off cash account we will be writing 1 lakh in credit column. Okay, so I hope it's clear. In the same way, a lot of transaction will be happening, so after that we'll be writing the next transaction and it will be continuing like that. Fine, now you have got an idea, just an overall idea about how we will be writing a journal, right? Okay, so I will be showing you a technique, a generalizing technique, what actually you should do when you get a transaction. Fine, so this is a generalizing technique. First one, analyze the transaction. When you are getting a transaction, just analyze it. What is happening in the transaction, you have to analyze it. Fine, then identify at least two accounts involved. Again, I'm taking the example of machinery bought for rupees 1 lakh. Here, two accounts. Which are the two accounts? Machinery and cash. Fine, find in which category each falls. Okay, category in the sense we have learned the terms, right? The terms, these are the categories. So here again, machinery and cash. Machinery comes under asset, cash comes under asset. Yes, that is what we do in the third step. Now, fourth step, see increase or decrease. Just see whether each accounts are increasing or decreasing. Fine. Now the last step, use the rule. I had given you a table, right? Just go to it and check whether it will be debited or it will be credited. So that's all for today's class. Thank you.